What is going on, everybody? And in this video, we're providing you a state of the market and stock picks for February 1st, 2023. So if that sounds like something you're interested in, consider subscribing as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So, AMD did quite well. They came in at 5.6 billion, estimated 5.52 billion. Revenue adjusted EPS is 60 cents, estimated is 67 cents. So they did extremely well. But on the same token, let's go ahead and flip this over to somebody else that had earnings today, and that would be a Snap. Absolutely wrecked. Now, if you can see here, obviously they did poorly, but the year-over-year growth, I think, was negative 7%. So Snap hasn't been the same, obviously, since the whole Apple fiasco. They haven't really found a way to recover. But on the same token, this is why Snap is important, because Snap also affects Google, which you've seen a dip, Meta, also another dip. Question is once the call goes through on Snap, this thing could lead even to more selling. So really any kind of ad space is hurting right now, obviously because of the things that we talk about on this channel. Now, it makes sense that AMD is doing well. Obviously, innovation is what's going to drive a lot of things in our current environments and just the way life is nowadays. And so being said, it's ripping. Obviously, everything needs chips. Everything that we have, even cars in themselves, takes thousands of chips. So, being said, this leaves us in an interesting spot. I think you're going to get a lot of push and pull moving forward in general. Obviously, innovative stocks will do well. Obviously, chips are in high demand right now, especially if you're trying to innovate. So there are certain sectors that will do extremely well in a recession. Others will not. And ads are going to continue to get hit. This is why it's going to be important to watch Google. We see what just happened to Snap. We'll watch and see what happens to Google here once Snap finishes this off. Let me actually go flip this back so we can watch Snap as this goes. As I am rambling here a little bit. So absolutely wrecked. Nonetheless, we will see. Google is going to be important on Thursday after the bell to see if they report the same thing. Now, takeaways from this is what I talk about. If you watch one stock, you can always have essentially reaction across the industry in general, right? Forgetting the term. The term eludes me right now, but essentially a cascading effect within other stocks, similar stocks. But nonetheless, this is what you're seeing in Google, you're seeing in Meta, and you'll see it across all ads. There's another one too, TD something, I can't remember. Trading Desk is also a big one that could be hit pretty bad. I don't remember what their ticker is. But nonetheless, ad space is going to hurt. Obviously, people aren't going to pay for spaces. Is something kind of forewarned about what could potentially happen there. Tesla obviously did okay. It's going to be interesting to see what happens with the remainder, with Apple, Amazon. Amazon, I think, is going to get hit really bad. We haven't really seen great results from cloud. We haven't really seen great results from essentially any kind of retail, right? And we haven't had Walmart yet. We haven't had Target yet. Target and Walmart are dealing with a lot of stolen merchandise on top of everything, which doesn't help either. I know the CEO, I believe it was Walmart, said he was going to shut down stores if people didn't quit stealing. So, and not that that really matters. They make billions of dollars a year. So, for them to really lose even 400 million, which is a crazy amount of money, it really isn't going to do much for them just because they make so much. They've even been asked to raise the prices because as long as people are in store, people will buy them, and that doesn't matter. And so that's how they're kind of trying to defend this whole stolen merchandise thing, is by raising prices. A lot of people are price gouging, trying to stay up with inflation right now, and that's another big indicator that things are still really bad, and that this thing's going to get way worse before it gets better. In the long term, right? It's not a short term play. Market just isn't going to rebound. Stock market might on hopium, which we do have. I'll flip this over to SPX and then get into our normal conversation, which we are going to have. I'll put this on the daily. Take some studies off so you guys aren't blinded by a million lines already. So tomorrow we have monetary policy, which is going to be big. I actually believe that we do have Meta on deck tomorrow as well. Let me just double check that. Tomorrow we have Meta after hours in the morning. We got Waste Management. We got Peloton in the morning. T-Mobile in the morning. I know T-Mobile just got hacked as well. Aflac tomorrow. And then again on Thursday, we have really big earnings with Amazon, Apple, Google, Ford, Qualcomm, Starbucks. So there's a lot of big earnings on Thursday coming up. And then after that, that's pretty much, in my opinion, that's pretty much earnings, right? The market waits for those earnings, and then it pretty much goes from there. And of course, earnings will continue on for many weeks after this, but that is what the market really wants to know, is how the industry leaders are doing, and then it dictates how the rest of the things play out. Now, I've talked about a normal cycle, and we're getting into that normal cycle. Once we start hitting February, it's not saying we can't push. We can continue to push up, but it's heavily reliant on what happens tomorrow with Powell and monetary policy, which I'll get into in a second. But ultimately, the market could, if things line up tomorrow with Powell, we could run probably for about another week or two. Like I've talked about, I think we could potentially get up to 4,300 if things are really looking good tomorrow. But at that point, we get into our natural decline in a normal cycle. In that normal cycle, it's probably one of the bigger dips aside from October. And so we have like two particular periods in a normal cycle that we dip pretty heavy, and it's around those times. And so we're going to have to see if it's fueled by anything, right? Things are really, really bad. They're not getting better. People are price gouging to stay up with inflation. It's a big problem, big concern. So to tell me that inflation doesn't exist, it's still sitting at 6.5, however you want to slice it in any report, it's still really bad. Nonetheless, tomorrow, monetary policy. Let's talk about that. So monetary policy, a lot of people are predicting 25-point basis move. I know a lot of different futures have been really adjusted lately. It seems like last minute they've been adjusted. That things could potentially get a lot worse as far as rates being held longer. A lot of people want rates to just flick back down from 5 to 2. We're not at 5 yet, but people want to really kind of see how Powell takes this next step, because it's going to be very important tomorrow on if it goes 25, 50. I know a lot of people are saying 25. Maybe it's 50. If it's 50, you're definitely going to crater the market at that point. There's already a lot of stress, and I think a lot of people are feeling that stress. Even institutions are feeling a lot of it as well. This is why you're seeing massive layoffs, continuing to see massive layoffs. It seems like every other day. I know Upstart, which was a big one that I played a lot last year, they are laying off like 20% of their workforce on top of everything, and they are due essentially AI generated loans. And this is why what came of their decline, because everybody's like, oh, well, people will just start getting loans because of inflation and everything, and it ran up. Like, I don't remember how high I got well into the 300s, I think maybe 4 at one point, but then it came crashing down. I think it's around $20 now, but nonetheless, Upstart, but they started losing money because people weren't paying back their loans. This was last year. And so this is really what the decline was. They had the one earnings where they were afraid people weren't going to pay back their loans, and that's what started happening. And now they're at the point where they have to lay 20% of the people off because of that, to try to remain profitable. And so, even though a great concept with AI and automatically generated loans, it's now the downfall, right? Because you were saying there's going to be all this ridiculous growth. I remember seeing so many people throwing tons of money at it last year. It was right when we really started declining, and we never quite recovered. It was when inflation got out of hand and everything else. But and so, nonetheless, tomorrow, Powell, 25 points. My honest opinion, I think he'll come in at 25. But then what's going to really matter is his attitude when he comes in there. Is he going to be extremely hawkish? He kind of wasn't his normal hawkish self in the last one. So it makes me think he may not be as hawkish, but he doesn't want people to just go crazy and start throwing money into different assets, because he knows that all it takes is a bad inflation report, and then he can't lay off rates. And he has to be on top of rates, because if for whatever reason he lays off of rates, inflation can get away, and if you're not on top of it, you're in trouble. Catch up you're in a bad spot if you're playing catch up. We've already kind of seen it so far, so that's why they kind of are layering these heavy doses of rate increases to try to combat that. But again, for whatever reason, something happens and inflation starts running away, there's a lot of things that can come into play that can kick inflation up. Aside from what it already is, it's already hard enough for people right now. Imagine if inflation starts running back up, right? You're laying off tons of people. We're still roughly around 1 million jobs to lose this year. The jobs that pay well are cutting fat. The jobs that don't have anything, that don't pay anything, that people are working 2 or 3 jobs just to stay above water, are not. People that are buying all these luxurious vehicles are selling them for fractions. Essentially, we've seen it. There's a track record you can look. It's not very hard to find. To think that things aren't going to get better soon. Like, there's going to be a lot worse bottom. The question is the bottom going to take the market with it? I think at some point there will be some sort of news that will do that. Whether that's people liquidating, trying to get out of their house because that's all they have, and then realizing that the pool of houses is people are still trying to price gouge. And to be honest, personally, I still look at a lot of different housing and everything else in the housing sector, and trying to keep up with the housing sector, because I want to take advantage of it. And people are still having houses at 30 days, 100, and some for over 90 days or so. After it goes into that 30 days, you kind of get into that category where things are, the people will start really giving you some really bad offers, where they'll come in $30,000-$40,000 less than what you're asking, and then that'll be the common after 30 days. And then if it goes longer, the longer it is on the market, the more people are going to try to throw that price out there, because guess what? If you're trying to sell your house and it's still up for that long, odds are more than likely that you'll take a really low offer. And so this is where great prices come in to buy these things, is these super discounted rates because of that. And so we will see. We'll see what happens coming of that. But the housing sector, again, is not something fast. It's not like the stock market. You can't wake up in the morning and actually see what it is. But it plays out very slowly, and things are not getting good. And like I talked about yesterday, you have some of these smaller loan companies that are starting to fold. All these people that took these HELOCs out when their house was 2-3x of what it was when they purchased it, and now the value of their homes goes way down. Right now they're going to be underwater on these HELOCs, and so that is a concern. And what happens with all of that? when people can't pay these things because they're getting laid off. So again, timing on this thing isn't going to be quick. People are liquidating assets right now. How many assets do they have? We'll go from there. But more so, let's shift this back over to Powell tomorrow. Tomorrow is going to be again important. 50-point, I think 50-point basis move. You're going to destroy the market. A hawkish Powell and 50-point basis moves. You got potentially could see a new low. Potentially. Now, if it's just hawkish Powell and a 25-point basis move, you're going to have limited upside, in my opinion. Either way, even if it's good, even if it's 25 and not so hawkish, you might be able to push this up to 4,300, maybe. Aside from that, the market itself is just it's waiting for the other foot to drop, and I think around that March time period, it's going to drop. Something will drop, whatever that is, and we'll see what happens. Because from what we're looking at, even at the auto loans are much like what they're doing for what they did for houses back in 2008, where they're just giving anybody an auto loan because they're trying to get them off because nobody's buying them right now. There's already been a mass reduction in cars as far as the demand, and so now these people are still trying to price gouge. It's going to take some time when they realize that nobody's going to buy it at those numbers. Again, destruction demand and demand destruction, and so you're starting to see that. And you're seeing that more and more and more. The more you dig just a little bit, you don't even have to dig that much. You can see a lot of the stuff surfacing now. Give it a couple months and wait and watch everything 50% off of what it is. Cars, houses, right? These are all things that are going to happen here in the next couple months. And again, how fast, we don't know. How much does it affect the stock market? We'll see. Again, it's going to take headline news as something that's going to do it. Where it's massive foreclosures, whatever the case is. A yield curve is the worst it's ever been in history. That's concerning. So, nonetheless, Powell, we'll see. We'll see how he comes in. That report comes in at 2. That's going to give us essentially it's going to give us the rates, and then at 2:30 you're going to have Powell. Powell will essentially tell us where we're going from there. So we'll wait, we'll see, and we'll take it from there. But yeah, I mean that's ultimately what it's about. So we'll see what Powell's got tomorrow, and again we have those earnings. We got Meta tomorrow, which will impact. I think all of those are going to be hit pretty bad tomorrow, nonetheless, just with Snap. But we'll see how it plays out overnight, and then we'll see what Powell's got on deck at 2 o'clock, 2:30. He'll be fielding questions. That's what really matters. So we see. So with that being said, we'll see what happens there. Again, levels to watch tomorrow. I think we're just going to continue to hover around between the 4,100 and the 4K mark. Again, we break out of that 100-point range. Again. 4,200, 4,300 really depends on what happens with Powell. Again, if we break back down below the 4K mark, there's a lot of support here, even though we have pretty much buttered most of the support. So we'll see how that does play out tomorrow. But again, it really, really is heavily reliant on Powell. Bitcoin, hard rejection off the 24K mark. We'll see. Again, all playing off of Powell. I can see this thing actually pulling all the way back down to the 20K mark for at least a retest. You would like at least a retest. You don't want parabolic moves. But we'll see. Again, that's highly dictated upon what's going on with Powell. Dollars, same thing. Looks like a break and a retest. To be honest, this thing looks like it's about ready to rip up. So that's definitely not good for the bulls. But again, we wait and we see. Tesla, big bull flag here, kind of for the most part. Definitely have to see this huge gap, parabolic move. I actually think Tesla's going to come back down and fill this gap. So at least looking at like a 147 drop. From where it currently is. Again, this is the break and the retest of the 50. In my opinion, I think this thing will at least sell back down to potentially that 140, potentially. Again, depending on what news and stuff happens there, will dictate whether it wants to float around the 140 mark or if we're going to see new lows. It all depends on the next couple events and then what happens in our normal our normal cycle in March. So Apple, bull flag, parabolic. Again, none of this is looking great, and you don't want parabolic moves because you get nasty moves after. So again, Apple wants to retrace 50%. You're roughly looking around the 134. You want this thing to break out. It needs to break the 150. So again, I think if we do get some good news, this thing could potentially see 150. Really just depends on how hawkish Powell is tomorrow. And again, 25 points is expected. BA, again, same thing. Everything is starting to look the same. Overextended parabolic move on all industries is not a good sign. When things start all looking the same, that could be some bad news, in my opinion. So we'll see. I'm saying it can't be to the upside, but the fact that everything's already been overextended to continue to try to push this thing up it just means that when it does retrace, when that event does happen, it's going to be more explosive to the downside, is all that means. JPM, again, still playing this range roughly between 131 and 143. So we'll definitely have to see that does play. Goldman Sachs, again, playing a range. Banks are just in the holding pattern, waiting for Powell. Again, if Powell comes in extremely hawkish, Powell might be mad at the fact that the market's gone parabolic. It's not the first time he's done that. So again, we'll all wait and see. 25 expected, 50 danger. And again, it depends. The market might take 50 and take that as a gut blow and then sinks off. And then what we really need is overnight digestion of what happens tomorrow. Is something I always talk about. You're going to get a lot of volatility depending on how hawkish he is or how hawkish he is not. If he becomes dovish, that can be more of a bullish sentiment. If it's 25-point basis move and dovish, that would be some bullish sentiment that would allow us to push another 100, 200 points up. But ultimately understand that I think that's about as far as we're going to go. We ain't going to see no all-time high. It's going to be this is just going to hold us up until we get into our normal cycle, and then hopefully nothing bad occurs of all the other things that we talk about here. If it does, well, you could see some pretty hefty downside. So I'm definitely going to have to watch and see from there. But if you make it this far, go ahead and smash that like button. And until next time, I'll see you guys later.